Welcome back to Chain Train, the show where we explore the latest in cryptocurrency, blockchain, and the evolving digital economy. In today's episode, we'll delve into the significant shifts in global crypto markets, including major legal updates, regulatory changes, and the growing geopolitical influence of digital assets. From Bitcoin's fluctuating prices to the expanding crypto arms race between nations, there's a lot to discuss. Cryptocurrency prices dropped on February 3rd, with Bitcoin falling to a 3 week low of $94,476 and Ether reaching its lowest point since September 2024 at $2,494. The decline was attributed to rising concerns over a potential global trade war after US President Donald Trump imposed 25% tariffs on Mexican and most Canadian imports and 10% on Chinese goods. These tariffs sparked retaliatory threats from Canada, Mexico, and China, increasing market uncertainty. Cryptocurrencies, often seen as a risk proxy, were particularly sensitive to the news. Bitcoin, which hit a record high of $107,072 in January, had surged by 40% since Trump's election, driven by hopes for crypto-friendly policies. However, disappointment has grown over the lack of significant regulatory changes. Trump, once critical of crypto, has since shown support, including creating a cryptocurrency working group for regulation. Ho Kai-shin, a 32-year-old woman, was sentenced to 6 weeks in jail for contempt of court after violating a high court order to freeze assets linked to her theft of $5.6 million in cryptocurrency from Bybit Fintech. Ho had used the stolen funds to live lavishly, spending $840,000 on a penthouse and luxury items despite the court injunction. Ho, employed by WeChain Fintech, manipulated payroll spreadsheets to redirect cryptocurrency payments meant for Bybit employees to her own accounts. After the theft was discovered in September 2022, she falsely claimed the funds belonged to a fictitious cousin and continued to spend the money. In addition to the civil contempt charges, Ho faces criminal charges for cheating money laundering and providing false information, with sentencing scheduled for February 20th, 2025. Bybit has recovered part of the stolen funds, but Ho has not repaid the remaining amount. India is revisiting its stance on cryptocurrencies due to global shifts in attitudes towards virtual assets influenced by policies like those of US President Donald Trump. The review may delay the release of a discussion paper on cryptocurrencies originally planned for September 2024. Economic Affairs Secretary Ajay Seth noted that the decentralized nature of crypto means India cannot adopt a unilateral approach. This review follows increased regulatory activities in India, such as fines for non-compliance issued to offshore exchanges like Binance. Despite the central bank's concerns about crypto's macroeconomic risks, India's market watchdog has suggested allowing more oversight, signaling a shift toward a more flexible approach. This comes as Indians continue to invest in cryptocurrencies despite the tough regulatory environment and high taxes. A cryptocurrency scam in Kuwait has led to an estimated loss of 40 million Kuwaiti dinars, $130 million, after the collapse of a new cryptocurrency called Bitcoin Kuwait. The scheme, allegedly orchestrated by an anonymous developer over 3 years, targeted young and inexperienced investors. Dr. Safa Zaman, a professor at Kuwait University, exposed the fraud, highlighting regulatory failures that allowed it to unfold. Despite the central bank's ban on digital currencies, enforcement is weak, and a lack of financial literacy makes young traders particularly vulnerable. Dr. Zaman called for urgent legislation to criminalize cryptocurrency transactions and hold intermediaries accountable. She also criticized local media for promoting cryptocurrencies, further fueling public enthusiasm and contributing to the scam. This incident underscores the growing threat of digital fraud, with criminals using fake websites and celebrity endorsements to deceive investors. U.S. Treasury Secretary Scott Bessent recently stated in an interview with Fox Business that the spirit of cryptocurrency is about freedom and that the cryptocurrency economy will continue to exist. He emphasized the enduring nature of cryptocurrencies despite market fluctuations. The statement reflects confidence in the future of digital currencies, which remain central to global financial discussions. The article urges readers to approach blockchain and cryptocurrency investments cautiously, considering the risks involved in virtual token issuances and speculation. Additionally, it clarifies that the content provided is informational and not investment advice. Cryptocurrency's rise has transformed global finance and geopolitics, with increasing use for sanctions, evasion, illicit financing, and statecraft. Russia, Iran, and North Korea have leveraged crypto to bypass sanctions, with Russia legalizing crypto mining and pursuing a digital ruble. Governments like China and El Salvador are adopting digital currencies, while emerging economies, including Argentina and Nigeria, turn to crypto for economic sovereignty. However, state-backed crypto initiatives raise risks such as fragmentation and surveillance. In 2025, the competition between CBDCs and decentralized crypto will intensify, with growing alliances like Russia, Iran pushing crypto for cross-border payments. Crypto's role in crime and conflict is also rising, with ransomware groups and illicit activities flourishing. Lack of global regulatory consensus will continue to complicate enforcement, allowing illicit crypto activity to thrive. Česká národní banka, the Czech central bank, has become the first to allocate 5% of its reserves to Bitcoin, sparking global speculation. Countries including Argentina, Australia, and Russia are exploring adding Bitcoin to their reserves. In the US, Senator Cynthia Lummis introduced the National Bitcoin Act, proposing a strategic Bitcoin reserve, with plans to acquire 1 million Bitcoins. Various US states, including Arizona, Utah, and Texas, are introducing bills supporting Bitcoin reserves and investment. Some countries like Malaysia, Singapore, and Portugal have tax exemptions for Bitcoin, with the UAE emerging as a hub for crypto investment. The writer argues that the race for Bitcoin dominance is a new geopolitical battleground, likening it to past arms races. Pakistan's future in the digital economy depends on clear cryptocurrency regulations and investor protections to avoid being left behind in this new digital arms race. That wraps up today's deep dive into the crypto world. We've seen the global rise of Bitcoin regulatory hurdles and the growing importance of digital currencies in geopolitics. Make sure to stay tuned for more updates and insights as we continue tracking the rapidly changing landscape. Don't forget to subscribe, and we'll catch you next time on Chain Train.